Do you realize that the size of equity markets has tripled since the crash in 2008? And there's still a push for the Feds to lower interest rates to keep the economy and the markets humming along. What does this tell you? That when the next crash comes, it is going to be catastrophic. And what we talk about here every day as we follow these stock charts, as we look at the ebb and flow of the market, is to recognize trends. That is when the market rolls over to go down, rolls over to go up, particularly on our weekly charts. We also look at the quarterly chart on the S&P once every quarter. But I'm telling you, my friends, training with us, learning how to read these stock charts and how to spot when systemic crashes are occurring or boom times are occurring. And we've got one going on right now, as you all know, in the Qs in the NASDAQ 100. We're going to get to that in just a minute. But it is so important that you train with us every day. Every day we require it. 10 minutes a day is all we ask, 5 days a week, that you watch these markets and that you learn how to chart stocks, chart ETFs. Once you have that knowledge, you have your own virtual printing press of legal money. But what you're really training for is game day. And game day is systemic market crash, when everything goes to hell in a handbasket and maybe drops 300%. Who knows? That's when you're going to have your head on straight, know what's going on, and everyone else is jumping out of buildings and running around with their hair on fire. And you are going to be out of the market, and you are going to be writing it down profitably, hopefully, if you train with us. Put together all the knowledge you learn from us and everything else you learn from books and practicing, all the other knowledge that you have, you'll be able to put that together, is my dream, and be able to not only survive, but thrive. That's what you're training for. That's game day. Now, let's jump into this market. The S&P 500, everything, in fact, up for the day, including bonds and gold. We're going to jump into the S&P first. What do we see going on here as we look at the weekly chart? We do see things pushing just a little above where they were over the prior week. Up for the day 0.34%. Derivative oscillators pretty much flat. That's fine. Price percent oscillator still heading up. Not as strong as it had been in the prior week, but looking okay. We look at the 2-day chart, pretty much flat. That's what we're talking about, where we see we're the first day into the latest 2-day candle, which will finish drawing on Thursday, but we sort of have things sliding sideways. Now, price is just barely above the 2-day trend line, well above the weekly. Derivative oscillator gaining upward momentum, but again, that price percent oscillator is pretty flat. We go to the 4-hour chart, and the pullback is underway that we have been waiting on. Remember, we didn't have an opportunity to jump into the S&P because the 2-day didn't cross over until 2-day candle ending Wednesday, the 3rd of April, and we're waiting for it to pull over. We will see if it rotates back over. Say it does that on Thursday or Friday. Might give you a jumping in point for a continued up movement on the S&P 500. So keep your eye on the prize. Let's see if it actually does it. Now we go from the S&P to the NASDAQ 100. We see that is up 0.54%, so a little over half a percent. We do see a nicer candle of up movement on that weekly chart. Price is just above the 2-day trend line, well above the weekly. Weekly's going up nicely on the price percent oscillator and the derivative oscillator. It's not flat, it's going up. That's good. We look at the 2-day chart and we see it's not flat. It is moving up some. Of course, we love it when it's just flying up, but again, it is moving up. Price movements above the 2-day on the 2-day chart. Derivative oscillator gaining momentum. Price percent oscillator heading up. And we go to that 4-hour chart. What do we see there? Well, the 4-hour, of course, with that sideways slide and the crossover, we told you not to just pull the plug, but to watch what your 2-day chart was. I said that yesterday. And your weekly, and said those were still looking good. Well, they did well today, and they went further up, and that is good. Now, we do see that we are crossed over going down on the 4-hour chart, so continue to keep your eye on things. Price is still above the 2-day, well above the weekly. That's good to see. And we had up movement in the morning, further up movement in the afternoon, up over 0.5% for the day. So again, you've done well. You've done quite well after your jumping in point. You know, we're up, around maybe, depending on where you got in on the afternoon on Monday the 1st. After that 4-hour crossover, which is what we're waiting for to potentially happen after a pullback occurred on the Qs. We're waiting for that potentially to occur on the S&P 500, and we shall just see. But again, you know, you can pull the plug and take your profit at any point. Things are still looking nice, up anywhere from $4 to $5 in the course of a week and a half, 2 weeks. That's looking, actually, yeah, not even 2 weeks. That's actually quite nice. So we'll continue to watch and see. And again, it's the magic of the system that we have created here. So an interesting statistic today from Ned Davis Research, that all of the algorithm quant trading, those types of things, computer trading that you have going on, is taking more and more of the ability of day traders to find discrepancies in the market and take advantage of them. And of course, we don't do that. We ride trends. And the longer the term trend, the better, because there's more money there. I hope you're practicing with us every day. Now, and by the way, buy the book. If you haven't purchased the book, it is available. 9th printing's on its way in from the printer. So we have plenty of those available. You can see the link in the show notes. And we're going to now go from stocks to bonds. What do we see going on with bonds? Bonds were up for the day, 0.24%. We see that price is trying to push just below the weekly trend line on that weekly chart. Had a spinning top the prior week. Now we have a solid red, smaller spinning top. Again, means indecision, tending down after a huge boom up for 2 weeks, back ending the week ending the 29th of March. And again, we see the price percent oscillator still positive. It's still above the red signal line, pretty much flat. Derivative oscillators lost a little bit of momentum. We go from the weekly to the 2-day, and of course, we saw the 2-day rotate down for 6 days, and over the last 3 days, because we're just the first day and the latest one, we finally have seen it sort of maybe bottoming and trying to head up. Still positive territory, getting really close, but a crossover has not occurred yet. Derivative oscillator's gone negative, but the price percent oscillator's not crossed over going down. Price is just above the weekly trend line after having pierced on that 2-day candle ending Wednesday. So that's movement for Tuesday and Wednesday of the ending the 3rd of April. That pushed through, but then again sort of bottomed and swinging. So again, we're still positive. What's going on with a 4-hour? Waiting to see, folks, if it's going to cross over. Derivative oscillator's already gone positive. Is there going to be a crossover going up on the 4-hour chart, potentially giving you a jumping in point on an up move on TLT? Now, there are reasons you don't have to take this, or, I mean, I would encourage you to consider practicing it to see what there is to learn off of it. But again, there are some concerns. What would those concerns be? Well, that you're pretty darn close to a 2-day crossover going down. Now, it could bounce off that and ride like a freight train up. That is indeed possible. Derivative oscillator, however, has already gone negative. And what do you see on the weekly chart? It's pretty much flat after a big boom up, but again, things are hanging right there on the weekly trend line. It could bound off that and head up. So just see what happens on the 4-hour chart and consider practice trading that. If you do, remember, print out. You'll see in the show notes, those of you who aren't subscribers, go to chartingwealth.com, subscribe for free. You'll see in the show notes there are links to our trade daily market and weekly market worksheets. That trade worksheet you fill out every time you do a practice trade, it is wonderful because it helps you write down your entry point, the reasons for the entry, follow the trade throughout, make notes, figure out what you're thinking so that you can, after action it, win, lose, or draw after you complete the trade. So I want you to have those daily market worksheets. They're available for free. It's a PDF. You can print it right out. Keep them beside your computer. When you enter practice trades, it's the best way for you to keep up with the trade. Also going to put in at the end of this video, there'll be a link you'll see on screen. Those of you who are listening audio, I want you to go to the website, chartingwealth.com. Under the trainings section, look for Easy Method for Tracking Trades. That is an easy method using freestockcharts.com or TC2000 to track your trades. It helps you set up a jumping in point. You can also set up, like I have on my charts, price change, percentage profit or loss changes, and all that, and it'll help you run it from the date and time you actually enter the trade. Okay, lastly, it's where we are on bonds. Now we're going to go back to the weekly chart, wrap this baby up. We're going to gold. Gold up 3.31%. What do we see happening on gold? Gold still in a confirmed down move on the weekly chart, losing a little bit of downward momentum on the price percent oscillator. Derivative oscillator. Price percent oscillator still heading down. Lost some momentum since that last week down. We have a green up candle, wick on the bottom, a small green open body, and then we have a bit of a wick on top. Now, when we go, and again, we're now through Wednesday, so 3 days into that 5-day candle. What do we see going on on the 2-day chart? Still negative, but going into the second green up candle. It's just the first day of the latest one, so that represents 3 days after blowing out on the 2-day candle representing Monday and Tuesday of this week, blowing out the down trend line we had on the 2-day chart. Derivative oscillator still negative, price percent oscillator still negative, but heading up. Hasn't crossed over yet because we had so much power of 8 days of strong down movement on that 2-day chart. Go to the 4-hour chart. What do we see there? Saw a bit of a blowing off in the afternoon on Tuesday, but picked up steam heading up both Wednesday morning and afternoon. Derivative oscillator heading up, price percent oscillator heading up, and of course we can see where things bounded down and hit right there at the 121 mark and then took off going back up again. We look and we can see, we've talked about this since the beginning, where we have what appears so far to be a place gold doesn't want to go below over the last many weeks, where gold, once it came up late in the year, and well, last year, and then at the beginning of this year, once it cleared the 120 mark or so, the 121 mark, sorry, we've basically seen it bounce off the 200 period moving average line on the 2-day chart. We talked about that, and that is what it has done. So again, that gives us a good thing to remember to put down in your notes, is that when and if gold, well, at some point, everything that goes up comes down. If and when gold blows through the 121 mark, then we can, of course, expect it to continue down, down, down like it did before when it finally bottomed. Somewhere we've got sort of a hard bottom there of 112.50, something along those lines. So again, pay attention. We talked about that, and it's important to look for and to see. Folks, that's where we are. Hope you're doing a successful trade in the queues right now, watching the S&P 500 for a potential trading opportunity, along with 20-year bonds. Again, waiting for those 4-hour charts to cross over, going up for potential opportunities in up trades. Want you to practice that. Remember, not a stock calling service. We're an education firm. Buy the book. If you want to really support us, become a Patreon supporter. All sorts of great trainings there, short chart training, a Bitcoin chart that we have that's phenomenal, along with our quarterly chart training and all sorts of special stuff, including monthly Q&A for our members who are Patreon members, along with reviews of the charts both stocks and ETFs you're interested in. That's where we are, folks, as we end the day and we continue to push through this week. God bless. All the best from the whole team here at Charting Wealth World Headquarters.